right, what's going on, everybody? Happy Monday. I hope everybody had a fantastic weekend, and so let's dive into it. And I was holding those debit spreads in Dow Jones and some other positions that we'll go over too, going into the weekend. And with the news of India and Pakistan attacking each other, I was like, oh, great, of course. But anyways, markets shrugged it all off, and market participants have decided the world is not ending. So, anyways, this morning with these debit spreads and Dow Jones here, they were June 6, 415 on the long call, 425 on the short call. I paid 470. I closed those out at 650. So that's a gain of 38%. Now I closed these out right away, and towards the end of the day, those would have been worth significantly more. But right here at the beginning of the day with this massive gap up, and it was right at the 200-day moving average. And I suspected later in the day it would be a really good day given just the strength, and still lots of people are short. So I figured there would be lots of short covering during the day. However, it's a huge gain right here at the 200-day moving average, a huge move. So, I got out of it, and I was looking more around like 418 level anyways to get out, let alone up here at the 200-day moving average. So that was already through my price target, a decent gain. So I was happy with it. And then on Thursday, a position that I took, or was it Friday? Thursday in Soundhound. And this is one that has been on my watch list forever. And there was an article that popped up about these guys on Thursday. And I thought, oh my gosh, I completely forgot about these guys. So Thursday was right here, and this looked fantastic on Thursday. So Friday morning, right away in the morning, I went long some calls in Soundhound. They got pretty decent liquid options market as well, but so like literally right in here. Now that day ended down 8% or 9%, I believe. So these were down pretty significantly. But the chart, everything still looked totally fine. And so I was not really concerned. Today, massive day, up 22%. So, that's fantastic. And the calls that I'm in are July 18th is the expiration, $10 strike price. And so these are longer dated call options anyways, which is another reason I wasn't too concerned about the movement on Friday. But I paid $1.53 for those. Those are currently $2.30. Actually I think it's less than $2.30, but right around there. I wrote all this stuff down prior to the close. But anyways, right around there, so it's a really nice gain. This chart looks fantastic. And look at this volume that's really coming in. There's a gap to fill all the way up in this $13, $14 range. So, right here at $12, I could definitely see this kind of chilling out. But you never know. Regardless, really good day. Great strength. Look at this on a weekly and monthly chart. So you can see it's really starting to kind of break out. And then look at this on a monthly chart. this is quite insane. I mean, this is a beautiful chart on a monthly chart. So I can't argue with that. And this has got some juice and a pretty liquid options market. So it's awesome. Okay. Now, moving on over, and they had a pretty decent earnings. I was looking at some stuff. It was decent. The reaction wasn't like that good or whatever. But the earnings, was good enough for me to not be worried about it. And so now, okay, so that's that. I'm still in these calls. Now let's go over other positions. So take two. I closed this out. I was not going to take a loss on this position. And clearly all of this was bought. And this still looks good. But, in my head I was just, with markets performing really well, I was not going to take a loss on a position where markets were ripping and a position is underperforming. So I got out of those. That was an equity position for break even. I think it was like 222 is when I got in. Yeah, like just right at all-time highs. So like, 22. So basically when I got down to 22, I just split the position because I'm not going to, like I said, I was not going to take a loss on this position when markets are ripping. And then throughout the day, I saw this had kind of regained back over the $225 level, and thought, oh shoot, there's some good strength in there. But such is life, and there'll be plenty more opportunities to get back into this if I choose. And I still may. This looks okay. This looks okay. So that's that. That was the thinking on that. Now let's go over to Germany. I'm still in these calls. These are now underperforming, but they're longer dated call options. So, whatever. July 18 is the expiration, $39 strike price. Those calls are $235 is what I paid. Those are currently $2. So whatever, whatever, moving on. I don't have anything else to say about this. So MicroStrategy now, talk about giving a lot of the gains back. Look at this. This is from yesterday. Wow. 430 after hours. Crazy. Give it all back. But yeah, I'm still in these. Average cost basis on these 330. And one of these days I will be adding to this position. So let's go over Bitcoin. And this still looks good. This looks fine. I don't know what people expect. They just expect this to just go straight up. I want to see some sort of consolidation coming in. These moving averages need to catch up. If this just starts blowing through everything, then I would get, actually worried, So Bitcoin still looks really good. So let's look at the Bitcoin miner. So Marathon and Clean Spark the other day, when was this? This was Friday, yeah. So whenever I did the video, like Wednesday or something, I wrote down, Clean Spark looks really good, and then by the time, I was buying calls in SoundHound and not quite paying attention to Clean Spark, and by the time I saw Clean Spark, it was up like 1,000,000%. I mean, yeah, see, look at this. First thing in the morning, 5 minutes, 10, 15, 20, 30 minutes, so, 30 minutes goes by or whatever. It's a pretty quick amount of time. The thing was already up like 17% or something. But Bitcoin miners are starting to work again. I don't know. I still just would not go after these. I just want it. The reason you go after these is to outperform Bitcoin. But now with ETFs and options and ETFs, and BitX, 2x leverage Bitcoin fund, there really is no need whatsoever to go after Bitcoin miners. There's no need at all. So, I look at them from time to time, so that way you just kind of get like a overall industry, kind of health check on it. So there's that. Let's look at Riot. I don't know. There's nothing to do here for me. The move that I would have captured is it already had happened. So it wouldn't have been a long-term hold position anyways. And that 12% or whatever. I guess on Friday that would have been. Which would mean that SoundHound was also on Friday. Oh, yeah. So I had said Thursday I was buying those calls. It was Friday that I was buying those calls. I thought I made a video on Thursday. Yeah, because this was Friday. Yeah. So I was buying all in here. So that makes sense. So anyways, right. So like 30 minutes goes by. I already missed this entire move. So I'm not going to be chasing any of that. So that's that for Bitcoin miners. Now let's go over indexes. So we'll head over here to the Qs. And this is clearly extended. But as the old saying goes, markets can remain irrational longer than you can remain solvent. And so really market participants were really pricing in end of the world type stuff. Also, money managers have never been this bearish in many, many, many years. So the fact of any sort of good news whatsoever is gonna just make stocks go up very significantly. And that's what I was positioned for, and that's what had happened. Now here, yes, I still have exposure, but a lot less now, right? So that's not to say that the rest of this week could be fantastic. It's just that here I don't know what the risk to reward would be. So for me, if I don't know what I'm risking, then I'm not going to go after something, So, because rule number 1 is capital preservation. So it's like the very first thing I need to figure out is, where do I know that I'm wrong? And for this could go all the way down, to like 20,000 pretty much, and maybe shake people out and whatever and be still totally fine, right? But that would be like a 4% move. And a 4% move in the index would be way more than I'm going to be risking on that position, right? Because, we trade options and futures, right? So, because essentially what that would mean is, so if I'm risking 4%, I would need to be looking around, like minimum 8 to a 12% move in the index, and that's just not feasible for the time frame. But now, with all that being said, we're back in action. Like the video that we made, a few weeks ago, where I had said, is that it? That's it for the bear market. That was it. My position hasn't changed. My opinion hasn't changed. I thought that there would be a great chance that the bear market would be over when I made that video. So now it's over. My opinion on it remains the same. Any sort of pullback, any sort of trade that meets my criteria, I will trade with larger size and more conviction now. That's basically all that this means. So now let's look at this on a weekly, and then also we have to look at this on a monthly chart. It's insane. This is just insane. This candle right here, yeah, it's insane. So that's fantastic to see. If you're bullish on stocks, you love to see this stuff. So now over here to ES, it's going to look similar to NASDAQ. Again, I don't know exactly what you would be risking here. You know, like what would you? Because this will at some point fill this whole gap in here. But you know, I mean, this is a major power move, though. You know, I could see this gap not being filled for a long time, but then again, anything can and does happen. But regardless if this gets filled tomorrow or not, this is a serious, powerful move that really confirms the direction the markets will be going here in the shorter term, shorter to intermediate term. So okay. Dow. Well, we already looked at Dow. Yeah, so see, I mean, you know, it's like right here at the 200-day moving average, already more than I was, more than I was planning on, higher than what the price target was that I was planning on. So I got out of those right there. My gosh, what if it actually breaks this downtrend? This was since December. Well, I guess since the end of January. But yeah, that'd be wild. All right, so now over to Russell. And you know, there isn't anything to do here. You know, although I would love to see small caps outperforming and just doing fantastic. There's a million other indexes that look better than this. And wow, is this sort of yeah, so okay, so there's that with Russell. Now let's go over to mid caps, and they should probably be looking pretty good too. But yeah, see right around here, this 200-day moving average. Let's go over to Argentina, and Argentina hit an all-time high, and you know, I got out on this day right here, and it said I could definitely see this going a lot higher, but given the current market environment. For me personally, I wasn't going to get aggressive and play for a breakout until proven otherwise. And I talked about that a bunch of times, where I'd be happy to be proven wrong in that scenario. Because that just means that for any other trade that meets my criteria, you can be much more aggressive. So that's what you want, you know. So yeah, so it's fantastic. So Argentina, what is this? A new all-time high for Argentina? It is, and wow, 1, 2, 3, 4, maybe 5 months of consolidation in here. Look for this sucker to be rocking and rolling this whole year. Yeah, I mean, this is something you cannot ignore. Argentina, and that's fantastic. For equity traders as well as their country. So that, you love to see that. You love to see a country doing well. So let's see here. That's it. Now let's go over Mag 7. Microsoft. Wow, look at that. 449. Cool. Awesome. That's great news. We already touched on the difference of Microsoft and Google. And it's so funny how things can change, right? Because, back here in December, the market had chosen Google as the leader for sort of AI, apart from Meta, but in different ways, though, in different ways. And with Microsoft really being the laggard, and it was for a while, and we talked about it and talked about it, like, you don't go after Microsoft. Microsoft is the laggard, And so now it's no longer the laggard, and we talked about why in the previous video, but basically Microsoft's new AI, the Copilot Deep Search or Deep Think or whatever, their new more advanced AI is really, really good, really, really fantastic. So yeah, that's it. All right, so Meta, wow, up 8%, 7.9%. That's insane. Yeah, I don't understand how anyone can be bearish. There isn't. Oh yeah, we already looked at Google. Apple. Well, let's go over Apple. Sometimes I often forget to look at Apple. Well, so just as I said, I don't see how anyone could be bearish. You look at Google and Apple. They both look pretty terrible. Although this is not at any sort of extreme levels at all, so this could definitely continue higher, and there is this gap to fill at 220. So Meta, Amazon. Oh, let's look at Amazon. Amazon doesn't look all that good, although today it definitely looks good. Yeah, it's really interesting. Wow. We got CPI coming out tomorrow, and I have no idea what's going to happen with it, and don't really care at all. Netflix. Let's look at Netflix. And this is awesome that it's pulling back. This will be a must go after, I think. Although I don't know about. Well, this is a proper double bottom. That's a proper double bottom. So we'll see what happens. All right. And so now let's just go over some commodities here and then call it a day. So we'll look at gold. Gold just really got hammered. Could this be the end of gold? It very well could. I said this day right here. When was this? Thursday? Or maybe this was Friday. I said, do not treat this the same as back here. They were not the same. And, but anything can and does happen, right? I mean, that day where I said that, don't treat it the same, that very next day was a pretty strong day for gold. But, this could be the end. This could be the end of gold. I think so. And also the other dead giveaway was silver in here. It's really kind of funky. So we'll see what happens. All right, so now let's go over to corn and wheat. Just really disappointing. I was really excited for this trade, but it never materialized. I never did anything with it. So I guess it's not that disappointing, but all right, so wheat. It's terrible. My goodness, although there is this gap to fill right here, which it did. So let's see how corn looks here. Yeah, that's okay. It's all right. We'll see what happens. It's about the 200-day moving average, right? So we'll give it some time. That'd be cool if this could get into some sort of uptrend. Wow, there's a huge gap to fill up to here. All right, that's that. Some gold. And then let's just go over some sectors here, and then we'll call it a day. Real estate, I still don't know. I don't know. I don't have any opinion. Bonds are selling off. I mean, this is of serious concern. That's like a broken record forever, but I mean, bonds cannot be selling off from here. What's the high yield bond? Yeah, so very strange, huh? So there's demand for that, riskier. So that's good to see. Always conflicting data, right? You want to see that. During bull markets, you want to see bearish news. That's definitely something you want to see in a bull market. XLU. Fantastic. Hopefully we can get a trade down in here, and XLU is coming up. That'll be awesome. Communications. This looks good. I won't go after this here. So let's look at biotech and then healthcare. wild. You know, I wouldn't be going after this here. XLV. Wow, what a day for XLV. Crazy. That's some serious power you cannot ignore. Oh. Cool. Yeah, so that's it. Let's see how Boeing is performing after all their commitments. Wow, yeah, see. You know, it very well could be that there's this gap in here. And, you know, I always mention sometimes, you know, gaps always do get filled, but they can be years. And so I could definitely see this one being years, right? So is this the time where Boeing makes its turnaround? Who knows? We hope so. Wow, look at this on the monthly chart. Super bullish. Cool. Yeah, I hope Boeing performs fantastically. And so with that, we'll leave it there. Let's look at Tesla. And then, you know, things are kind of stretched here. You know, like I said, it's certainly markets could just continue straight up. But, you know, you got to think, what are you risking to get that return? What is the risk? You know, and all the trades have basically been made. I've captured all the moves that I want to in this market. If you guys have been, you know, watching the videos over the last couple weeks, since I made that video of saying, you know, is that it? Is the bear market over? You know, I wanted to kind of poke and prod and see if in fact that was true and capture conservative gains while seeing if my thesis turned out to be true. So as of now, it seems like there's a high likelihood that it is. So now with any sort of pullback happening, I'll be going back to sort of same position sizing as, you know, during last year. So it's fantastic. If you miss this next move higher and for some reason this goes much higher, do not worry. There's always another opportunity to get in. And again, that's just a good thing, right? So when the pullback does happen, or whenever a trade meets your rules, meet your criteria, then you can have higher conviction in that trade. So these are all good things, and we'll catch you guys all later.